Good evening and welcome to the BizNews Briefing. Today is Thursday, the 19th of February, 2026. I'm Patrick Kidd. On tonight's show, Peter Major on mining winners and a note of caution on copper, another bumper market update led by Gold Fields' $1.7 billion shareholder return, a practical explainer on Section 12B and solar tax relief, and, from Bloomberg, humanoid robots are grabbing the spotlight in China. Up first, mining guru Peter Major unpacks a busy results week in the resources sector. He sat down with BizNews editor Alec Hogg this morning.
So we had a whole bunch of companies reporting this week. What was your pick of the bunch?
Man, it's Pan-African or Durban Deep, because both those are run by someone who's been there now over 10 years, who knows everything about them. Durban Deep, geez, I think the MD there has been there 15 years. And it's so measured. It's so progressive. Whatever he says happens. And Durban Deep, and Pan-African's just about like that. Very few surprises, and the surprises just ricochet off the thick armor that he's got on the company there. So, I think pleasing results from those two. Very pleasing results. And they couldn't be more opposite, huh? One's just mining sand dumps all the time. And the other is mining more underground than open pit and is branched into Australia. He's lucky on the M&A. I thought he overpaid a little bit at the time, but the gold price has gone so much higher than what Quibus paid for it. Doesn't matter. Looks like a good move. It is a good move.
And just to close off with a reminder that you've given us, and that came from Kumba and what you were saying on iron ore, is that sometimes today's most fashionable and most attractive girl at the dance becomes the old hag in a little while, because lots more girls just like her get pushed into the lineup. It does appear as though that's happened with iron ore. Is there a risk of this happening with copper?
I believe there is. And I'm on a couple mining chat lines and websites. These guys, they'll go to the grave telling you copper's just going to keep going up. And I was at Robert Friedland's presentation at the Mining Indaba. He has been saying that nonstop for 10 years, and he's just proven right. So it's hard to argue with a lot of people that are very involved in that industry. They see numbers I don't. And the copper side mimics it. And we know the world's going to AI. We know the world needs more electricity. We know all the world wants to get first world standards. So you add to that the cost and time and effort to build a new mine. Copper could be the most popular girl here for a few years to come, Alec. I'm not cynical it's going to fall. I'm always cautious when thing is way outside its mean, way outside its standard deviation, like I was with gold. And I still don't want to invest in gold here, even though it's 5,000, it's down 10%. But copper, yes, I'm looking for assets that don't reflect this price, growth stories. And that's what Jubilee's in. And there's a few other copper producers that are doing the same thing. Yeah, copper can fall from 13 to 10. They're still going to make a ton of money. And it's not reflected in the price yet.
Next, we turn to today's SENS roundup. Gold Fields leads the pack with a major payout to shareholders, while Kumba, Jubilee, and Mondi also feature in a resilient set of updates.
In today's corporate news, Gold Fields Limited has delivered a standout set of numbers for 2025. Fueled by higher gold prices and an 18% jump in its gold production to over 2.4 million ounces, the miner saw its adjusted free cash flow surge to nearly $3 billion. Shareholders are reaping the rewards. Today, Gold Fields announced a massive $1.7 billion payout, which includes a significantly higher dividend, a special dividend, and a new share buyback program. It's been a winning stock for investors. In the past year, Gold Fields shares have risen more than 140%. Staying in the resources sector, Anglo-American subsidiary Kumba also delivered a resilient performance in 2025, boosted by higher iron ore prices and a much-needed improvement in Transnet's rail logistics. Core earnings there were up 14% to nearly 32 billion rand. Huge company, this. And the iron ore miner continues to reward investors, declaring a final dividend that takes its annual distribution into the equivalent of a 10% dividend yield at the current share price. But even that hasn't been enough to attract investor interest. Kumba's shares were actually down a couple of percent over the past year. Still with mining, Jubilee Metals Group delivered a robust half-year update today, showcasing strong momentum in its Zambian copper strategy. Remember, it closed down in South Africa and moved to the north. Despite heavy seasonal rains, the company's core Roan operations hit their target feed rates, driving a massive 173% surge in Roan's copper output. Meanwhile, the Molefe mine continues expanding, backed by highly promising exploration results alongside partner Galileo Resources. Overall, copper that was produced rose nearly 9%. And just a reminder, in a major strategic pivot, Jubilee also finalized the sale of its South African chrome and platinum group metals operations, banking $25 million in cash. It's now a pure-play copper producer. Packaging giant Mondi delivered its full-year results today, posting a resilient underlying performance. It had 3% growth in revenue and posted €1 billion in operating profit, this despite a prolonged industry downturn. Chief Executive Andrew King highlighted aggressive cost-cutting measures in the report to shareholders today. This includes 3 recent plant closures and the successful ongoing integration of the recent Schumacher acquisition. Management warned of softer paper prices earlier this year, but remains highly confident in the long-term structural demand for sustainable packaging. Tributes have flooded in after the passing of futurist Clem Sunter yesterday. Among those received by BizNews was from Discovery founder and chief executive Adrian Gore, who wrote, "I'm so sorry on the passing of Clem. What a wonderful and impactful person." BizNews community members Dervald Lourens and Sipho Skosana summed up the many reports that came through to us with Clem was one of the great captains of industry. His passing reminds us of how short our time is on earth, and sad news indeed, and may his soul rest in peace.
Cody from Paul has sold multiple vehicles to We Buy Cars. Suspicious? I think so.
Is that a crime?
No. Where are you getting the cars?
I buy them and I sell them at the spot like a normal person.
Okay.
No, man, I'm just an accounting student. I know a good deal when I see one.
That's Excel meant. What's more stressful, tax season or selling a car at We Buy Cars?
Tax season, obviously.
We Buy Cars, the easiest way to sell your car by far.
Then, for taxpayers and investors, Mitchell Fieldgate of Pangea Wealth breaks down Section 12B, the renewable energy incentive that's become a key tool for high earners looking for legitimate tax relief while backing commercial solar.
Yes, so the Section 12B is a tax incentive from the government to invest into renewable energy. So it was made in 2016. There was an increase in 2023, but it's just an incentive. I mean, you get incentives all around the world, and it's just been amazing to see the outcome that happens when you just dangle a tax incentive in front of people. So, I mean, I think it's been a big reason why load shedding is not around anymore, because it's been absolutely amazing outpour in capital on all these solar projects. I mean, South Africa has one of the best suns in the world, but we don't have hardly any solar. I mean, especially in the northwest, I mean, you don't get much better sun in the world. So, yeah, the Section 12B, you get 100% deduction. There's been a lot of these funds made where people can increase the deduction with the debt capital contribution. So, for example, there'd be $1 million of equity that a client would put in, and then $1 million of debt taken out. $2 million of solar is deployed, and then the client can get a $2 million deduction. So we've seen a lot of people, high income earners in South Africa, they're quite desperate to reduce their taxable income because they rightfully so get a bit frustrated when they're paying these huge tax. You know, you earn 10 million rand, you're paying 4.5 million to SARS. And then on top of that, you still have to pay the hidden costs that come with living in South Africa. Okay, that's security. Other countries you don't have to pay for security because there's police, which your tax money should be going to. You have to pay for your own medical aid because you're not going to get any, medical assistance here. You have to pay for your own schooling if you want your kids to go and get proper education. So it's not like you pay this big tax bill and you get all these benefits. A lot of guys are quite gutful, for lack of a better word, of paying this tax, not having any ways to reduce the tax, and also then not getting anything from the tax. And I think, with this renewable energy incentive, it's just a much better transition of money instead of paying SARS, where there's so much leakage, inefficiency going to these institutions and services that you don't really, don't see any upside on. It's now going directly into these profitable energy projects. And I'm surprised. I mean, I spoke to a colleague and they said they should actually do an incentive where you get a big deduction if you invest into potholes or roads or or bridges. I mean, because then right now, if you pay tax, the money that eventually gets deployed on fixing potholes, 10 Rand gets paid in tax, and probably like 2 Rand is actually at the end of the day actually goes to actually fixing the problem. Where if you have an incentive and you encourage private sector participation, you can get that, you get a lot less leakage.
And closing out tonight's show, humanoid robots stole the show at China's Spring Festival Gala. Our partners at Bloomberg reports.
If you were to make a comparison from 2025 to 2026, I think it was also just the sheer scale of use at robots at this event, because in 2025 it was a lot of pressure on Unitree because they were the sole exhibitor or the sole performer in this, and they had that synchronized dance routine. This time around, though, as you said, we were seeing multiple companies, Unitree, Galbot, Magic Lab, Notics Robotics as well. So more companies in the mix, and also different things they're doing as well.
What about I mean, you're closer to this world than I am, Bill. In terms of where is the conversation right now? I mean, certainly they are much more functional. They, naked eye, they're a lot more smoother. Every time I see something like this, it reminds me of that film. Do you remember Real Steel back in it was Hugh Jackman, I think. But in terms of the commercial application of robots, where is that conversation, and how is that conversation evolved? Like, what do we need robots for in the world?
Well, we know what we need robots for, what their applications are likely to be, and it's really that key question of when can we get them into households. And you did see more household tasks, for instance, being performed at the Spring Gala, but you speak to anyone in the industry and they say that we're really still years away from that happening, because real-world environments are messy and it's very difficult to program and to have the robot from a software basis ready for those sorts of environments. So in the meantime, it's really this focus on commercialization strategies, and to that end, you see a lot of robots companies in China also looking to academics and to universities as a key sales channel, at least in the near term.
Okay, well, yeah, interesting. Certainly, I wonder what 2027. I'm now looking at 2027, right? Just looking how big the leap was from last year, to your point, to 2020 to 2026.
That's been tonight's BizNews Briefing. I'm Patrick Kidd for BizNews.com. Thank you so much for watching, and we'll see you again on Monday.